Hello traders, happy weekend. Vladimir Ribakov here from Traders Academy Club, and welcome to the Forex weekly review for the week 22nd of 27th of July 2018. Previous week started boring, ended up beautifully as per the plan on many of the pairs we had from the previous week. And this week it seems it's going to be even more interesting, even though we are talking about summer, which is important to remember because during the summer the moves sometimes are random, unexpected, fast, and then boom, gone. Another quiet period. It's important to remember that because we always start the week with a huge excitement, like this week I'm going to rock. But the reality sometimes turns to be that the market is very, very quiet, and when the market is quiet, there are no moves. Traders have a hard time to make money, which makes sense, right? If you think about it, we as traders, all we want is the prices to change, right? Go up, go down. The most important thing, the volatility, the prices to change. If the price change, we can actually make money. If the price stay around the same zone, it's almost impossible to make the money. What happened on the last few days of the previous week, during the previous week? Trump is against the Fed. Hiking rates too much is not good. That's according to Trump, and the dollar reacts immediately. Of course, all the trade war between US to China, US to Eurozone, US to Canada, US versus the whole world contributes on these current moves, right? So there are several great technical opportunities the way they form, and I would like to go over them right now. But first of all, thank you very much for finding the time to watch my video. I hope you enjoy it, and I would like to ask your support back. If you do enjoy the video, if you find them useful, please show your support back. Hit the like button below the video. Leave your feedback, my motivation. Keep doing that week after week for you, for your benefits. So thank you in advance, and of course you can feel free to share with anyone who you would like, who you can think can have a benefit by watching this video and profit from that. So the first one is the euro dollar, a pair that we have been long. Where is my pen, my virtual pen? Here we go. So the first pair we have been talking about is the euro dollar, right? We analyzed that as a special cycle, and as long as the last low holds, this is our invalidation area, right? The lows here. With the bullish divergence, our expectation was to look for buy dips. So that basically the previous week started bearish. It looked like, oh, it's gone, right? But the fact is, and this is why it's important to have the invalidations area, we had it from the daily, which means this is holding, right? And it's forming as a range. As long as this is the format, these drops should never be scary to us. They should be welcome to us, because that's how we can make the profits. We got a double wave to the downside, bullish divergence exactly as we wanted, and from the zone of the bottom of the range, we got a beautiful format of two waves, bullish divergence and the second wave by itself. The trend line was broken, the move happened to the upside. So far, so good. My view remains the same, and I do expect the euro dollar to continue further. This week, we have the cash rate decision on Thursday in the Eurozone. That could be effective, of course, but my view remains bullish. Unless there will be some fundamental changes from the Eurozone, I think the euro can still go and play inside the range, or even try and make deeper correction upside before it turns bearish. So I would remain bullish as long as this structure remains, and we can see this currently structuring itself to the upside. As long as it remains, right, break above the levels should lead to the next important ones. That could be this is the zone, right? Break, retest, continuation to the next important zones. That's for the euro dollar. The next one on the list is the pound dollar, which we were bearish. Now look what happened. We reached the area of 130, the psychological 130. It did not reach yet the 128, 127, which is the daily cycle. However, it got closer, much more than it used to be a couple of weeks ago, right? We are right around the level of the 61.8. And we have a clearance zone right here. We just cleaned the stop losses below this area. And the best part from my point of view is that we now have also another false break and a beautiful candle pattern. Let me zoom in for you here, which I love to see, the engulfing and almost equal tails. Classical pattern from my point of view, and assuming it's coming also from another false break and the structure of regular divergence turning to be a fake convergence. Fake convergence means the MACD trying to make a new low with a false break and a bullish divergence from the moving averages. This structure is very, very powerful normally for buys, and I would say as long as this area, the invalidation zone, holds, we should be looking for buys. How the buys could start and develop here? We now have the current short-term scenario bullish divergence. Now we start to face some kind of possible bearish divergence, right? So I would expect to bounce from trendline or resistance zone right here or here. And then once we get the bounces, I would be looking to start and jump into the buys. Okay, so that's the plan for the pound dollar. As long as this invalidation area holds, we can look for the buys. If you want to drop even lower, no problem. That could start to be a great opportunity to watch for a special cycle to form, create some kind of correction, and make the continuation. So bullish run it is. Euro pound, which is bearish for the long term from my point of view according to the weekly cycle, has now basically crossed, during this week, crossed the previous critical zone. Now it might make the correction slightly deeper towards the zone of 0.90. That might be the scenario there. So basically I would say this way: as long as this low holds in validation, the euro pound could provide us further continuation upside. So drops might still provide rallies before we face a top around the 0.90, and we are 0.90 plus, yeah, and then we are after big sells. The invalidation for this plan would be the break of the big trend line and lower lows. If that happens, we are immediately turning to bearish for the long run and looking for sell the rallies. As per critical days for the euro versus the pound, we need to focus on this. Well, first of all, you can see here 17 to 20 was very, very critical day, right? And it happened right here. 17 to 20 was the top for the bounce. But the main portion, we do need to pay attention to the end of the month, 29, and the beginning of the next month. That's why, from my point of view, currently we have some short-term sells, but they might go and provide a further rally continuation to the upside. Next one on the list, euro versus dollar versus the yen. Apologize, and look at that beautiness. We've been talking previous week on the previous analysis that we must pay attention to the 15, which blocked here for a short-term correction, and then we need to pay attention to the 2021, which means as closer we come to these days, the sells should happen. And it started to rock right on that period, right? So the beautiful drop down started to happen. Basically the format happened as by the book. Daily was a cycle by itself, 4 hour is a cycle by itself. We got two false breaks, one false break, second false break, and lower lows for the principle of the convergence. That makes the dollar yen at least for the short term to be bearish, and I say at least for the short term because we don't know how, we don't have any clear cycle from the weekly direction, so we can't really make any long-term conclusions, but we do have to aim the 38 down to 50 of the short cycle and 38 of the bigger cycle, which is right here. So rallies should be opportunities to sell as long as the invalidation holds. That's the plan. And on the 4-hour chart, basically, or the 1-hour chart, what we should be looking at, that's opportunities for Fibo retraces, right? So if we get a retrace, we have the Fibo zone, and from here look for bearish evidence. Best part for that would be if we also get some bearish hidden divergence, right? So rally, lower highs, right? Lower highs, higher highs on the histogram for the hidden divergence and for sell opportunity. So that's another great one to follow from my point of view. Australian dollar, a pair that we covered a couple of weeks ago, basically continue to be inside a range, pretty much same like the euro dollar. The good part here, it's also now making the double bottom on a daily chart. Here looks promising with a divergence. And at the end of this cycle, we expect further continuation to the upside. Now, what should we pay attention to is this structure, right? If we manage to go and make higher highs, that's a good sign for bullish continuation. We can see that holding these areas and look for the buy opportunities. As long as we are above the invalidation zone, look to buy retraces. Same we can say about the New Zealandian dollar, but basically the same structure, so not going to dig much deeper than that with this pair. Next one on the list is the New Zealandian yen, which is very, very interesting. According to the weekly cycle, the last divergence developing is bullish, and we are stuck inside kind of a channel, bouncing from the bottom of the channel. And the daily chart provided a cycle by itself, that is a double cycle, and this is a triple descending cycle, 2 false breaks, and we don't have higher highs yet. However, we have the attempt to get the possible breakout above this trend line. So if the pair managed to do so, that's a great continuation to the upside, and from my point of view, it has all the reasons to start looking for these buys already. Aggressive, but correct. The way I see that, we have here a possibility of some kind of a special cycle, 2 waves correction on the format. This should become the buy area for the Kiwi versus the yen. So what we want to see here is the second leg creating, bullish divergence to form, and this to turn to be the buy opportunity. The bullish plan will remain as long as we are above the invalidation area. Next one on the list that we have is the pound versus the Kiwi, a pair that I would like to long for the long term after corrections on a daily. Daily is still stuck inside the range, currently bouncing from the bottom of the range. So from my point of view, there is a great possibility for continuation downwards. We have a trend line that we need to pay attention to, the connecting the lows. We can of course go through that. And on the 4-hour chart, there is no divergence against us on the ending cycle. So this should be, from my point of view, the next direction. Sell the rallies should be a good plan for the pound versus the Kiwi. If we mark this area, you would figure out the depth of the correction should be 161.8 of this, and that should match 61.8 of the second leg. Here we go, right? So that's pretty much the area, and from my point of view, we should be looking to sell from here or from here. Okay, definitely good one to pay attention to. Gold and silver. Gold has reached the zone that we wanted to follow. This is the 1220, slightly lower down to 1200. It's a beautiful bounce. I'm not quite sure and confident yet it's good enough for the long term. However, on the short term, this is exactly what we have on the gold. This becomes a false break on the trend line. With the divergence forming, of course, it's a great structure, beautiful bullish engulfing. We need to pay attention to statistical that we have also 21st, right, which is right now the beginning of the week. So previous week was a great call for it, a great possibility for a retrace. So from my point of view, for the short term, due to the fact that this is a classical duplication zone and a false break of this cycle, makes it to be a good valid point for the correction. 4-hour chart is a structure of cycle by itself, kind of like that, and this is basically the place where I think that we start to deal with a bullish correction. Not sure how it is enough or not for the long term, but for the short term it seems to be good enough. So if we can format something like that, 2 waves retrace or a bullish hidden divergence, and we should be looking for further buys. Invalidation plan would be here. Now it's important to remember for gold that this is aggressive currently due to the trade war between Trump and China. So the risk for such trades should be kept on the very lowest part. So that's my view for the gold, which is extremely interesting. Indices, our German DAX looks good. Finally, we got what we wanted. The second leg bounced from the 61.8. That's what we wanted to see in the previous week. And we got a trendline breakout. We got a bigger trendline breakout as well. Divergence is there. So the ideal would be if we can break below this low, gain some momentum and continue lower. But from my point of view, it's bearish as long as we are below the invalidation. If we go above the invalidation, the sell plan becomes not valid, of course. As per the US indices, still nothing. We're still in the very tiny ranges, nothing new under the sun. So from my point of view, it doesn't really work to deal with that. Cryptocurrencies, I have nothing new to say. My view remains completely the same as on the previous week. No new opportunities on the list, so not going to bother you with new ideas. Everything remains exactly as on the previous week. And of course, I will continue to go live on the charts day by day in the live trading rooms inside the Traders Academy Club. If you are not yet a member, you are invited to join us. Below on the description there is the link for the invitation. You can easily get the 7 days completely free trial. Come and join and see what do we do and how do we do that. We are there for you, and I hope you will like it. So once again, thank you very much for watching this video. I wish you a wonderful week. If you enjoy it, please support back with a like button and leave your feedback. If you would like me to cover any of the instruments that are not included inside, let me know. I cover the ones that are currently the most interesting technically from my point of view for the coming week. If there's any specific that you would like to me to go over, let me know. I will do that on the comments below. And of course in the live rooms, on Monday I will publish my PDF version for the review. So or just come back to the video, and below in the comments and in the description you will find the link for the PDF version, or follow the newsletter because I will email the link as well. So that's all for now. I wish you happy trading, wonderful weekend as well. Thank you for your time watching this video. Yours, Vladimir Ribakov, Traders Academy Club. Bye bye.